How to start investing in stocks. Investing is a way to set aside money while you are busy with life and have that money work for you so that you can fully reap the rewards of your labor in the future. Investing is a means to a happier ending. Legendary investor Warren Buffett defines investing as the process of laying out money now to receive more money in the future. The goal of investing is to put your money to work in one or more types of investment vehicles in the hopes of growing your money over time. Before you commit your money, you need to answer the question, what kind of investor am I? When opening a brokerage account, an online broker like Charles Schwab or Fidelity will ask you about your investment goals and how much risk you are willing to take on. Some investors want to take an active hand in managing their money's growth, and some prefer to set it and forget it. More traditional online brokers, like the two mentioned above, allow you to invest in stocks, bonds, exchange traded funds, index funds, and mutual funds. Online brokers. Brokers are either full service or discount. Full service brokers, as the name implies, gives the full range of traditional brokerage services, including financial advice for retirement, healthcare, and everything related to money. They usually only deal with higher net worth clients and they can charge substantial fees, including a percent of your transactions, a percent of your assets they manage, and sometimes a yearly membership fee. It's common to see minimum account sizes of $25,000 and up to up at full service brokerages. Still, traditional brokers just file their high fees by giving advice details to your own needs. Discount brokers used to be the exception, but now they are the norm. Discount online brokers give you tools to select and place your own transactions, and many of them also offer a set it and forget it robo advisory service too. As the space of financial services has progressed in the 21st century, online brokers have added more features, including educational materials on their sites and mobile apps. In addition, although there are a number of discount brokers with no or very low minimum deposit restrictions, you may be faced with other restrictions, and certain fees are charged to accounts that don't have a minimum deposit. This is something an investor should take into account if they want to invest in stocks. Then, if you're in a tight budget, try to invest just 1% of your salary into the retirement plan available to you at work. The truth is, you probably won't even miss a contribution that small. Work based retirement plans deduct your contributions from your from your paycheck before taxes are calculated, which will make the contribution even less painful. Once you're comfortable with the 1% contribution, maybe you can increase it as you get annual raises. You won't likely miss the additional contributions. If you have a 401k retirement account at work, you may already be investing in your future with allocations to mutual funds and even your own company stock. Many financial institutions have minimum deposit requirements. In other words, they won't accept your account application unless you deposit a certain amount of money. Some firms won't even allow you to open an account with a small sum of as small as $1,000. It pays to shop around some and then to check out our broker reviews before deciding on where to open an account. Some firms do not require minimum deposits. Others may offer often lower costs like trading fees and account management fees if you have a balance above a certain threshold. Still, others may get a certain number of commission-free traders for opening an account. And economists like to say there's no free lunch. Though recently many brokers have been racing to lower or eliminate commissions on trades, and ETFs offer index investing to everyone who can trade with a bare bones brokerage account. All brokers have to make money from their customers one way or another. In most cases, your broker will charge a commission every time that you trade stock, either through buying or selling. Trading fees range from the low end of $2 per trade but can be as high as $10 for some discount brokers. Some brokers charge no trade commissions at all, but they make up for it in other ways. There are no charitable organizations running brokerage services. Depending on how often you trade, these fees can add up and affect your profitability. Investing in stocks can be very costly if you into and out of positions frequently, especially with a small amount of money available to invest. Remember, a trade is in order to purchase or sell shares in one company. If you want to purchase 5 different stocks at the same time, this is seen as 5 separate trades and you will be charged for each one. Now imagine that you have decided to buy the stocks of these 5 companies with your $1,000. To do this, you will incur $50 in trading cost, assuming the fee is $10, which is equivalent to 5% of your $1,000. If you were to fully invest in the $1,000, your account would be reduced to $950 after trading costs. This represents a 5% loss before your investment even has a chance to earn. So that's all. Thank you so much.